Director of Resurgent India Limited. I would like to welcome to all of you in this webinar, which is on the very, very important topic, which is related to healthcare. And we have very good panel also, the healthcare practitioners who are basically so-called practitioner come entrepreneur. And then we have the funding agencies, which includes NBFCs and banks. Those are funding to this sector. So I think we have a very good panel today, and we will learn from them. We will understand from them basically what are the opportunities and challenges in the healthcare sector, and how this sector is helping the overall economy of the country also. And as friends, we have seen in the last 2 years were very difficult for everybody. I would like to salute to all the doctors and the healthcare professional and health worker for their support to our country. They were there when we were sitting at home. They were helping. They were giving the support. They were away from their family. Despite of it, they have done a lot for all of us. Because of this, we are here. We are survived, and we are in front of you. So it's a big salute to all of them, that we have come out from that situation, and this industry has done well actually. So thank you to all the professionals, all the health professionals for their support to the nation. Friends, we have the audience also, which is those are from different backgrounds. So we have the healthcare people, healthcare professionals, healthcare entrepreneurs. We have bankers, we have rating agencies, we have private equity funds, we have professionals also. So it's a mix of people who are from different background, and they are very much interested to listen all of you from the funding point of view, from the opportunities point of view in the healthcare sectors, so that we all together can build the healthier India actually. So I would like to just brief you. I would like to cover up some part of the healthcare sector from my point of view, and then I will invite all the panelists one by one for their deliberation. So, friends, the healthcare industry in India have the hospitals, medical devices, clinical trials, outsourcing, telemedicine, medical tourism, health insurance, and medical equipment. So it's a big sector actually. If we see, it's a very, very large sector, and industry is growing with a very fast pace. And we see there is the expenditure there from the government and the private side both actually. So this is the sector where the government is also spending, the private sector is also spending, and they are building up the infrastructure, health infrastructure in the country. And this growing of the life cycle diseases and the rising of demand for the affordable healthcare delivery system due to the increasing healthcare cost. I think we were discussing before the start of this webinar that the healthcare cost is another aspect which need to be taken care, because India is a country where the 60% population is living in the villages, and they are not having that much of income where they can afford the high cost healthcare solutions or high cost healthcare support. So technology is playing. So technology is very, very important. The health tech companies are helping a lot. They are coming out with innovative solutions. Some time back, I have seen, I think, on the Shark Tank India, there is a show which is for the entrepreneurs. Somebody has developed the ECG device, which you can keep it in pocket actually. So these kind of things will help to our country in a big way, because you see, we are not only the one population. A lot of rural population is there where they are not having that kind of infrastructure, that kind of facility, so that these kind of innovations or the instruments can reach there and can save the life of many people actually. So that is important. The emergence of telemedicine, I think COVID has taught this lesson, that the many people or many doctors also now practicing or using this telemedicine in a big manner. And health insurance penetration is also, I think, growing very fast in India. And government has also come out with that Ayushman Bharat, I think, which is a game changer for the poor of the country. So I think with this health sector will grow also, and the people will get the better health support also, healthcare support also. And if you see, government is providing a lot of benefits. So government has covered this healthcare sector in the infrastructure category. From the banking point of view, so there are many benefits which the banks are getting under infrastructure. There are certain covenants also. But still there are advantages. And this healthcare market is growing very fast. I think as per some estimation, I was seeing some report. It has been estimated that it will reach to 400 billion by the end of this year. Actually, the growth, the CAGR is something around 39%. So, which is a I think big number, which is growing. And the digital healthcare also taking the shape in India. And again, this is not a big industry as of today in terms of value, but it is growing very fast. And as per some estimate, this compounding annual growth rate is expected something around 30% in the next 5 years. So this is another segment which is growing very fast. Diagnostic market also increasing more than 20% of growth. So I think this is contributing a lot in this. Telemedicine is another area which is also growing. As of today, I think it is very small, but it is expected that by 2025 it will be more than $5 billion in the overall telemedicine market actually, and it is growing with the 30% or more than 30% actually. And this Ayushman Bharat is the world largest health insurance scheme, and I think we'll see the impact of it maybe in next 5 to 10 years, where the every poor of the country will get the advantage of it. This 100% FDI is allowed under automatic route for the greenfield projects in the healthcare sector, and for brownfield project up to 100% FDI permitted under the government route actually. So this is another I think incentive or the advantage which the government has given to the healthcare sector. And there is a very unique scheme which has come very recently, the last year only, during COVID time, to support the medical infrastructure in non-metros. So government has come out with the emergency health scheme, which called National Credit Guarantee Trustee Limited, the parent body who is managing this entire scheme. And under this scheme, the government has committed the 50,000 crore guarantee for the healthcare infrastructure in the non-metros. And there are certain guidelines that the maximum of 100 crore can be given with some interest cap. So this under this scheme, the interest rates are very, very low actually. So anybody who want to set up the medical infrastructure in non-metros, they can avail the funding from the banking sector, and they can get very, very low price also because it is guaranteed by the government. So this is another the big aspect for the healthcare sector, and I have seen that many hospitals or many the other healthcare companies have taken this advantage. And this PLI scheme is another aspect. I think this government has come out this PLI scheme for the health for the medical equipment and pharma. So this will also help to I think substitute to some extent the import can be I think reduced, and we can manufacture in India these pharma medicines and the medical equipment. We can meet out our needs, and then we can export it also. So this can be a game changer also in the healthcare sector. So government is doing a lot to support the sector, and even the private sector is coming out very well. Many large chains are there in the country. Those are like Apollo, then the Max, and there are many other names are there. Those have created the plus kind of infrastructure, and they are growing with leaps and bounds. Actually, they are helping the entire I think healthcare sector. So so there are many large groups are there, and other than that, you see now the concept has come of the specialty chains also. So many specialty chains are there in India which are focusing on the one aspect of the health, and where you can go and get the everything done at the very reasonable cost. So this is another area which is growing very fast, and I think in every field of the health it has come, and there are many players who are growing faster and faster. So we have today also Mr. Ashim, who is the Dr. Ashim. He is the person who is running that specialty chain. So, friends, this is brief about from my side about the industry and the funding. Well, the funding is very, very important aspect, because without funding, it is very difficult to set up the infrastructure, or and there is a need of working capital also. You see that, as I told, that government is spending a lot and the private sector is also spending a lot. In our country, the CGHS is one of the area where the lot of patients are getting treated in the hospitals, and where the money is coming from the CGHS actually. So although this is a big business for the all hospitals, all healthcare chains, but there are challenges also, which we will discuss in detail with our panel, that how they are addressing these challenges also. And we will also discuss that how the internationally the government is, or the other countries are helping the healthcare sector. I like the long-term funding, which is one of the very, very important area, because any hospital takes a lot of time to break even. So if we can have the long-term funding, I think our the hospital or hospitals chains or healthcare companies can perform better. And if they can get the funding at the low cost also, that will be the advantage to the entire country also. So friends, we have very good panel. We have CA Partha Sastri ji, who is the group CFO of Metro Group of Hospital. Metro Group of Hospital is a well-known name. And Partha Sastri ji is also having very, very wide experience domestically or internationally. And he is into healthcare sector since last maybe 8 to 10 years. Before that, he was in other sectors. And by profession, he's a chartered accountant, and he has done a lot of funding for the healthcare sectors. And he the group CFO of this Metro Hospital, where he's running the entire show. So nobody can be better than him. So Partha Sastri ji, first of all, I would like to welcome you and thank you for joining with us in this webinar. And sir, if you see this the healthcare sector, as I told, that it is growing very fast, but there are opportunities, there are challenges also. So if any hospital, if somebody want to set up a new hospital, or somebody want to set up another hospital, what are the options for the different kind of funding? Because any hospital, it needs lot of money actually. It's a capex heavy business. And as we were discussing, there are new models are also coming, where the asset light models are also there. So if we can get from you that the different funding options for the hospitals, from the banking point of view, from the non-banking point of view, or from the structured point of view also, and this what is the asset light model, how it is working also. So over to you, and thank you very much.
Thank you, Ashish ji, and thanks to all the participants and my panelists also. Now, as a hospital, it's a very capital intensive model with requirement of nearly, if you are setting up a very normal hospital without too much of multi-specialities and other things, is the cost per bed approximately hovers around 40 lakhs to 50 lakhs. So it increases by value with specialities. It increases by value on technology. So basically, if we are looking at a very cost effective and serene structure, so per bed cost varies from 40 to 50 lakhs. So a 100-bedded hospital, you can understand, goes up to approximately around 500 crores on, 50 crores on a normal base. So the first thing is capex funding. So capex funding in Indian scenario, banks, financial institutions have a door-to-door tenure which cannot exceed more than 8 to 10 years. Moratorium is an issue. So that basically creates a situation where the hospital is trying to do a ballooning system, so that the loan repayments are lesser upfront, and they can increase it as their volumes increase. So that is one of the major focuses. Now, as far as capex equipments are concerned, from international procurements, which normally are not available in India, uh, say for example, if you have a CT machine or an MRI machine, or maybe even higher equipments like cancer treatment protocols. So basically, that can be done through a foreign funding, which is normally done very easily by the banks. There are leveraging processes also on the foreign currency risks that you are going through. We have, in most cases, seen buyer's credit being utilized, which is supplied by the Indian banks and also by foreign banks and foreign, mediators. So those are also there. If you go by facts and figures, in India, we have approximately 2% of the GDP, approximately, as the healthcare budget, which includes both on account of capex as well as revex. So that is one of the major concerns, because in internationally it is approximately around 8 to 9%. So healthcare spends in India is really a very, very, what should I say, complex process right now. And if you look at the growth trends, it would be approximately around 245 billion USD, which needs to be pumped into India to give India a better healthcare facility, uh, at least till the year 2030. So that's quite a huge amount. And this can actually give a 4.3 million additional employment opportunities and 141 billion in revenues for the entire segment. Uh, and that actually covers approximately around 340 million Indian citizens who can have access, who do not have access to primary healthcare on various levels, specifically in the rural areas. Now, based on the funding patterns that are available, you have growth or venture capital or private equity funds, which are there always. But again, there is a, like, these are only for segments which have already set themselves up. The multipliers are varying to a certain extent. The required IRRs are at 25%. So again, this is a very costly source of funding. So we can come to IPOs, again for established hospitals, which have a track record, which are profitable. So in the last 18 months, we have seen 3, 4 hospitals, not naming them, but going into the IPO. Then we have the government processes, the National Health Protection Schemes, NH coverage, UHC is there. So this is a method by which new hospitals and current hospitals can go in for their necessary incremental revenue, as well as for short-term and long-term funding processes. But here also we have, as I said, that only 1% of the total, 1 to 2% of the total GDP is there for the healthcare. So payments are scarce. You have to wait for 3 to 4 months. So here the banking channels come in for short-term fund arrangements, and specifically in case of where you are having to cater to your cash flow requirements. So this is a major issue that comes up for most hospitals in India as on date. So cash flows, not considering the top 3 or 4 who have maybe 70 to 30 ratio of cash to panels, or other hospitals have a reverse ratio, which is approximately ranging from 50 to 70% of panels and 30 to 50% of cash. So again, the situation varies in this case, and these are basically the mid-tier and the lower-tier hospitals which have to suffer. So this is again here we are looking at internationally. Bill discounting is a process which one can look at for generating revenues for these sort of you know panel funds which are normally having, let's say, 45 days to 6 months of paying. So that is one of the issues that comes up to manage short-term funds. Long-term funds, I'm very sure the banks are there. At the same time, the government is setting up also various other funding processes, like, for instance, the emergency funds, which have been announced for 50,000 crores and which has been extended by 1 year also. So that is again one area where we can look into for short-term funding. But there again, we have a criteria for who can avail the funds. The funds can only be availed by people who already have a facility and who can actually get 20% more. That's what I can understand about the whole process. So 20% or 25% as per the bank's assessment, and that fund is accessible. But what if somebody is coming up new and has to contend with all these things? So basically that is where the gap comes in. So new hospitals, new healthcare facilities which have come up post-COVID and during COVID, we have now increased the infrastructure considerably. But then again, these hospitals are having to shut down in certain cases. So they are going in for operating base process, wherein they are telling bigger hospitals to go in and take over their hospital with their equipments and everything for figures as much as 5 to 14% of gross revenues. So these are again another method of funding for and generation of revenue for the new hospitals. So what we are also seeing is public-private partnerships. Many governments are having facilities which are quite big enough. So they are going in for public-private partnerships where you get a decent and reasonable amount of space in government-owned hospitals. At the same time, equipments are available. We are also finding global health players like, Parkway and Lulu coming in to a lot of extent, taking over hospitals. So these are basically the methods and the processes by which we are looking up to go in and consider the funding requirements of the organizations per se.
Okay. Great, sir. I think you have very well covered all aspects of the healthcare funding. So you're giving that idea that whenever anybody wants to go for the funding for hospital, because in our country, we are not getting very long-term funding. So there can be a ballooning kind of situation where initially there will be the lower EMI, or later on this can be the higher repayment of the loan. So that because initially, yes, the difficulty that you are not getting that much of utilization of the capacity. So you will not have that much of revenue to sub the loan actually. And I have seen in the past, many hospitals would not repay the loan because of that. They have not thought of at the time of taking the loan that now how to structure this loan, because they had gone to the bank told that we will give you 8-year loan, we will give you 10-year loan. They built up the model for 15 years. They said it's okay because at least I'm getting the loan. And they got the loan, they started the project, and all after 2 years, when they started repayment, they were not having sufficient cash flows. So there was not a problem in the business model. There was not a problem at all in the hospital. Only the problem was that they could not get the funding for the right tenure actually. If they could get the funding for right tenure, right moratorium, I think the hospital will be doing very well actually. So So this is the particular problem in the country, which is, I think, facing by the new hospitals when they are coming up, because they, as you told, that
Again,
the capex.
sorry to disturb. Again,
Yeah,
Ashish,
please.
the basic, the bulk of funding requirements is for equipments in a hospital. So if you consider a super specialty hospital for cancer, cancer treatment equipments are really, really costly. Like, for instance, it can be upwards of 10 crores for an equipment. So basically, we need to understand that the government, who is actually going all out for these PLI schemes, I have not included healthcare equipments to be part of that. Whereas the total imports in India, as per recent statistics, is more than 240,000 crores. So basically, if we can, if the government can work on this, then we have cheaper equipments which can be manufactured in India, thereby avoiding unnecessary payment of customs duty. So customs duty in such cases are more than 18%, considering the GST effect on that. So basically, if you can save 18% or 20% of a project cost, then it is a huge amount of savings. And the repayment models also work very, very efficiently in this case.
Very good, sir. I think it's a very good suggestion which you have given. I think government should cover up this healthcare equipment also as part of the PLI scheme, which might be a game changer for the import in our country, actually, because import is a big problem for us. So thank you, sir. Thank you very much for your nice deliberation.
Welcome,
And
sir.
thank you. So, friend, we are not only having the hospitals in our country, we are having the other healthcare infrastructure also. And there are large hospitals, there are big hospitals, and there are small nursing homes, pop and mom kind of store the healthcare facilities, where the MSME sector, diagnostic chains, there are many other, I think, segments of the healthcare are there, which are in tier 1, tier 2, tier 3 cities, and their requirement is not very high, and they are not having the parameters which are needed by the banks or by the lending institution for funding, because you need to have a you should be profitable, you should have this much of net worth, many criteria are there. So there is a need, and I think somebody should fund them so that they can also grow, they can also contribute in the healthcare sector. So we have Mr. Anuj Pandey, Anuji, business head for the Ugro. He is the co-founder of the founding team of the Ugro Capital. Ugro Capital is a NBFC which is helping the very sector, in many sectors in the MSME side. And healthcare is one of the area where they are funding to the various healthcare players across the country. And Anuji is having very, very good experience of working in the banking side, and I think he was there in some pharma company also for some time. And he has more than 20 years of experience, and he leading that practice where he's supporting in a different manner, actually. So their onboarding is different. Their I think the assessment of income is kind of different way of they are doing the assessment of income. So there are many new things which are happening in the country. So we would like to listen, understand from Anuji, from NBFC point of view, that how Ugro is helping to the healthcare sector in different ways and the MSME sector, sir. Over to you, and thank you very much.
Thank you, Ashish ji, and a warm welcome to all the participants and the eminent panelists. So a little bit about Ugro Capital. We are a new age NBFC, about 3.5 years old. The idea of setting this up along with in the leadership of Mr. Nath was to solve what internally we call solve the unsolved, which is basically the problem of credit gap for MSMEs in India, and to find a way through better use of data science and technology to really underwrite the customer in a more efficient way and give him a good customer experience. So we have been in existence for 3 years and growing very fast. We crossed 2,500 crore of AUM in December this year. Ashish ji, just to bring home the point of what you were talking about, when we started, and this is a typical problem with MSMEs in India of traditionally, that applying for a loan is a very frustrating experience. And the amount of data which is asked from them, an amount of paperwork which is asked from them from a traditional lender is not funny. What we said that we will solve this problem using digital means. So if a MSME customer wants to apply for a loan, he should be able to upload whatever is required in less than 10 minutes. And we should be able to give him an in-principle decision within 1 hour. That is the objective in which we set up. Glad to inform, we have been doing this now successfully for now 3 years. And the way we approached this was that we focused only on 8 sectors, and healthcare is one of them and one of our primary focus. We said that if we have to successfully lend to an MSME customer, we have to look at him via the lens of the ecosystem or the sector in which it operates. So we worked with CRISIL and developed a very, very exhaustive for a particular sector. Then we developed a very, very exhaustive statistical scorecard with the help of CRIF Highmark, which is a bureau, where it differentiates between. So I'll give you one example. Healthcare, everyone talks about healthcare as a one white canvas, but an IVF clinic is very different from a 20-bed nursing home, which is a very different from a pharmacy which is on a highway versus a pharmacy which is inside the hospital premises. Now, all these 4 are SMEs, are part of healthcare, but everyone's cash flow is different. Everyone's repayment behavior is different. But typically, when they apply for a loan, everyone is asked the same question and asked to produce the same set of documents. So we said, can we solve this? Can we make a model which can include the characteristics of the subsector in which they are? So we have made exhaustive, more than hundreds of statistical model for each of the subsectors within a sector. And when someone applies, we ask them very customized questions and go back to look at their repayment behavior. And instead of just looking at a generic bureau score or generic bank statement, we apply the characteristics of that subsector and then assess. This has helped in increasing the approval rates. This has helped in increasing the decision tact. So even if you have to say no, we have found that if you can say no quickly to an SME, he appreciates it because he doesn't waste time and he can go to some other person who can lend to him. So they really appreciate that. So overall, the approach has been to apply, a templated data science backed approach for underwriting. Of late, the digital stack in India is improving a lot. A very new kind of funding opportunities are coming up, where the new age pharmacies or new age medical equipment aggregators or a marketplace have come up who have lot of transaction data history. So today, if I am a small pharmacy or a small nursing home who buys smaller equipments once in a quarter, and I have last 1 or 2 year history of how much I have bought, only basis that machine learning and artificial intelligence can be applied, and one can process loans. So we are working on that space. A big opportunity also is a lot of smaller hospitals when they when patients pay through an insurance company, lot of times the actual cash coming from the insurance company might be very late, and to fund that gap in terms of working capital gap, one can have supply chain kind of opportunities. So a lot of data is being made available on that, and we are working on that. So broadly, our personal view and our own experience on SMEs in healthcare sector, the future seems to be very, very bright. There's a lot of opportunities, lot of similar-minded players, fintechs and other lenders are coming up, making smarter and smarter use of technology and data. So we can say that in next 3 to 5 years, short to medium term, the whole experience of getting a loan for working capital is likely to be more smoother. Government is helping a lot in terms of account aggregation model and open credit enablement network, where the data which is stored across various units is now getting stored in a standardized format so that any financer can use it. This will only help the customer. He will have more and more choices. So overall, we are quite positive on the sector. It has withstood the COVID stress, as Mr. Parthasati and Ashiji, you were alluding to. And now it has come up on its own and will, in medium to short term, will grow very fast.
Great, sir. Great. I think you are very well covered. I think we would like to get know more from you a little bit more. Actually, the kind of products which you are offering to the MSMEs, and practically see what kind of funding in terms of minimum ticket size or maximum ticket size, so that the many MSME people are there, those are listening this, they might get the advantage of it.
Sure.
Generally, when you are onboarding these customers, you told that you are looking after their I think maybe 1 or 2 year track record. But how you are assessing their income when because everything funding is everything related to the past income, whatever you have, and the projected income also. So how you do that actually?
So second question first.
Yeah.
We don't ask for any financial statement. Wherever GST is applicable, we only ask for GST returns and last 12-month bank statement to be uploaded, and that's it. And then our machine learning algorithm takes over. It calculates on its own whatever is required. So nothing more is asked. We give unsecured loans, completely unsecured, based on cash flows up to 25 lakhs. And we give secured loans up to 3 crores. We also do supply chain financing for small vendors or dealers up to 3 crore limit, where typically the tenure is between 60 to 90 days. So we are across all secured, unsecured, and invoice discounting space. And we have invested a lot in not asking too many documents. So only a consent, which is now very easily, conveniently can be given if the GST is applicable through an OTP route, where the customer gives in consent, and we fetch the last 24-month GST data from the GSTN site. And if he has a PDF upload or an internet banking, he just uploads the last 12-month statement, and that's it. Typically, if this process, the upload process takes 5 to 10 minutes, and our decision, in principle decision, of course, in case of a secured loan, a more technical and legal due diligence happens in due course, but in principle decision can happen within 15 to 20 minutes.
Okay, so end to end, suppose one customer is applying for loan, end to end, how much time it takes?
So for an unsecured loan, an in principle decision can happen with less than 1 hour, and then depending on a customer's availability, a credit manager speaks to him and agrees on a commercial term. So an unsecured loan can be approved and disbursed in less than 2 days.
Okay.
A secured loan can take a little longer because some of the legal due diligence and technical due diligence of property in India is still not digital and is dependent on manual checking. So that can take about 4 or 5 days. But that also internally we target that we should not let the customer wait for more than a week. So an in principle decision there also within 1 hour, but the final decision based on property due diligence within a week.
And there is one, I think, notion in the mind of the people that NBFC are charging very high cost. So would you want to comment on this?
So fortunately, unfortunately, NBFCs are dependent on their borrowing rates from banks. So it is a function of that. But to tell you, we have a co-lending program with Bank of Baroda where we are giving secured loans between 8 to 9.5% interest rate. Then our own program of secured loan is at around 12% interest rate, and unsecured loan typically is around 18% interest rate.
Okay. Okay. So it is, I think, keeping in mind that you are dependent on the bank funding or the funding from the outside, you are not having any deposit, public deposit, so-called
Yes.
public deposit. So definitely there will be some difference in the bank rate and your rate, but I think it should be reasonable. So thank you very much. I think you are very well. So you are meeting out the short term and both the long term requirement of the industry. So
Right.
that's good actually, and you are funding to all spectrum of the healthcare sector players, and that to MSME in the rural or urban or the semi-urban areas. Thank you very much. So friends, so we discussed that we have hospitals, we have other players also, but there are specialty chains. Actually, if you see in the last 15, 20 years, there are many names which have emerged, and they are doing wonderful. They are growing, and they are helping. They are reaching to the small cities also, and they are the game changers. So we would I think like to discuss on that part. And among us, we have Mr. Ashim Garg. Ashim ji, the founder of the company called DC, which is, I think, the kidney care segment. And Ashim ji is having very good experience of working in the National Kidney Foundation, Singapore. And as an entrepreneur, he has done wonderful. And he is the alumni of Indian Institute of Management of Bangalore. So academically also he is having very good academic background. So Ashimji, first of all, I would like to welcome you and thank you for joining with us in this webinar. And Ashimji, we would like to understand from you that what is the need of the specialty chain when the hospitals are there, multi-specialty hospitals are there, specialty hospitals, super specialty hospitals are there. So why the people are looking towards this the specialty chains? What are the advantage of it? And other than that, on the funding side, so Asimji, we have seen that you have raised private equity, that too from the large fund of the sovereign government of, I think, some government. And you must have gone through the entire process for the private equity funding. In healthcare sector, we would like to, I think, understand, or our audience would like to understand, if they want to raise the private equity or venture capital typically for the brick and mortar business, because health tech, lot of funding is coming, lot of buzz is there in the market, and there are some unicorns also are there basically, but you have a typical brick and mortar model where how the investors are looking in terms of your growth, in terms of other criteria, and what are the major things which they are looking when they are giving funding. And as entrepreneur, you can guide to our audience also that when they are going for the private equity funding, what are the precautions, what are the areas which they should take care, and how to deal with the investor also. So that will help, and whether this equity funding is costlier than the loan funding or banking funding, why the people should go for equity funding. Over to you, and thank you very much.
Thank you, Ashish. Very good evening to all my fellow panelists and the audience members. My name is Asim Garg, and I'm the promoter and founder of DC Kidney Care. We are a chain of dialysis clinics. So to answer your first question, Ashish ji, the need for specialty clinics or single specialty healthcare units. There are a few points why the need emerged for single specialty healthcare centers. Hospitals, B, whether it is secondary care hospitals or tertiary care hospitals, they have a lot of burden on them. And having single specialty clinics eases the burden on the hospitals, because a lot of these single specialty clinics are taking care of daycare activities, in which the patients do not require long admissions, but they require maybe a 2 hour or a 3 hour treatment, or maybe they just need to visit the clinics. So This eases the burdens on tertiary care hospitals so that they can focus on their core areas. The second reason is that the economies of scale, and since running a hospital is a mammoth exercise, the costings or the cost of running a hospital is quite high, because of which the cost of providing some of these services is on the higher side, where if we provide such services through single specialty centers, the overheads of running such a center is on the lower side, and we are able to provide such services to patients at a lower price point, which due to economies of scale and due to lower overheads, we are able to pass on those benefits to the patients. The third is that for a lot of patients, they do not need to go to a hospital, and going to a hospital can be an emotionally and a mentally taxing experience for some of the patients. Hospitals can be infection prone. So if a patient needs to get regular treatment, they might want to prefer single specialty centers, which can be in a high street model or nearer to the patient's house. Which brings me to the fourth point, wherein in our case, when a patient requires dialysis twice or thrice in a week, they would want such services to be nearer to their houses, so that the travel time is reduced. So because of these multiple reasons, the need for single specialty emerged, and companies like ours emerged to satisfy that need and to plug the gap. Now, regarding the funding opportunities, so I started the company in 2009, and I have gone through, I think, all the funding options available. We've taken bank loans, we've taken private equity. So when I look at from a company perspective, there are three routes of funding for any organization. The best route is to generate internal accruals and profits. So, but in healthcare, that is amongst the toughest part, because to free up internal accruals and working capital cash flows, you are dependent on you getting your payments on time, whether it is from CGHS and other fields, and the price point is always stressed in healthcare. The second is which is the route of debt. In case of debt, I think it is the most prudent and economic form of funding available, because it puts a lot of pressure on the company, and it inculcates a lot of fiscal discipline into any organization. And it is probably one of the cheapest forms of capital that is available. The problem with debt has traditionally been that, before any new age entrepreneur, getting debt straight out of the gate becomes difficult. They need to show a track record, or they need to have a property to pledge. And that's where a lot of companies get stuck. And the third form of equity is obviously private equity, the VC funding route, and the venture capitalist route. This, I think, by far is the most costly form of capital that is available. And people who want to go for it, I think they should go for it with the open eyes and open mind, because this requires a taxing load on the entrepreneurs or on any business, because this is the most costly form of capital available. Typically, any VC or private equity fund who invests in a venture, in their mind, they look at returns of 25-30% IRR. Anything less than that, the investment is not really working out well for them. So they typically want to invest in businesses which can generate minimum IRRs of 25% or more. The requirement for private equity. So typically what a private equity fund looks for is that they look for businesses which can grow fast and reach to a dominant or a monopolistic position, wherein they can corner a significant portion of the market and then generate quick returns through profits. That is a traditional model of investing in a company. For a lot of these VC or PE funds, when they look at healthcare, apart from the digital healthcare, which makes a lot of sense, there's a tech play there. But in typical bricks and mortar businesses, the gestation period of a hospital is it's quite long. You start a hospital and you build the infrastructure, and then from there the hospital becomes financially viable. It takes years to achieve that. And typical VC or PE funds have a very short time frame. They want quick returns in 4 to 5 years. So that form of exponential growth and quick returns can be generated through the single specialty model, because essentially it is the asset light model. You rent out a space, or you can have a facility up and running within a few months. And from there to getting to a break even, within about 6 to 7 months, you can achieve operational break even from setting up the unit and running the unit. So that is what attracts a lot of private equity funds. And my advice to anybody who's looking to private equity funds would be to look internally on why they want to generate a private equity fund or a VC fund, because generating a VC fund is easy, but managing the growth and ensuring returns for the investors is the toughest part. One has to, and typically the few parameters that are looked for before investing in any business is the addressable market, how big the market or how big the problem is that you're trying to solve. Within that frame, how big you can be, how quickly you can scale the business up, and can you achieve a dominant position or a monopolistic position. I think these are the few parameters that any VC looks for. And apart from that, VC money typically, apart from being expensive, comes with a lot of riders also. So you need to have a proper team in place. You need to have proper governance structures in place, and that also adds on to the costing of a company. So managing a VC fund or managing a few investors on your cap table comes with it a lot of costs also. So one has to take care of that as well. But this is what the VC funds are looking for when investing in a single specialty chain.
Great, Ashimji, great. I think you have very well given the complete idea that why the single specialty chain are required, chains are required, because you rightly told that people are looking some kind of low cost model where they can save the cost. It should be at nearby to their place, and the fear of this infection in the hospital. So these are some of the things which I think attracting the single specialty chains, and you can say very I think faster model in terms of setting up of the facility. So hospitals, it takes 2-3 days, but in your kind of setup, you can open the center within maybe 2-3 months, or maybe even 1 month also. So there's the advantage, and you can reach to the every nook and corner of the country also. Other than that, on the private equity part, I think you have very well said, and you have given very good, I think, idea to our audience that it has value, but it has cost also. So then anybody want to go for private equity, they have to see the value which they are getting, and they have to see the cost and other nuances also, which will come along with that. But across the world, if you see that the most of the organizations are raising private equity, and they're growing actually, and then they are giving the exit, or either they are coming out with IPO. So it's a model which is I think prevalent in the market. Some of the players are going for that, some of them are not going, but depend on your requirements. So very rightly said. Thank you very much, Ashimji, for your deliberation, and I think our audience will get the benefit out of it. Friends, now we have the large bank of the country, the largest bank of the country, and without bank, I think we cannot imagine the funding for the healthcare sector actually, because the major contribution is coming from the bank only, and banks, the SBI is helping the healthcare sector in many ways, and they have many products also, many schemes also. So we have Sandeep Chaudhary ji. Sandeep Chaudhary is the AGM and the relationship manager in SBI, and currently he is heading this IFB Kolkata. He is AGM in IFB Kolkata, and he had more than 16 years of experience in the corporate credit, banking, credit analysis, and all. And he is by qualification, he is MBA and certified financial planner also. So first of all, I would like to welcome you, Sandeep sir, for joining with us. And thank you to SBI also for partnering with us for such kind of webinar, where we are trying to impart the knowledge or the understanding from the practical point of view. It's not a workshop, it's not a kind of theoretical training. So we have invited the practitioners. They are giving the real life examples. They are guiding our audience, and the audience can implement in their business right away, and they can take the advantage of it. So Resurgent India is having this motive that how we can part the knowledge in a practical manner to our audience. So, sir, we would like to understand from you, mainly from the healthcare point of view, that how you are helping the healthcare sector across, because you have large number of branches, large reach also. And of late, I have seen that this under this emergency credit line scheme for healthcare, there was some circular which has been issued by RBI internally for helping the this sector, where the rate of interest is very, very less, or I have seen that very liberal terms are there. If you can guide us, or if you can guide to the audience that what are these schemes, so that they can take the advantage of it. And what do you think that from the healthcare point of view, the way the banks are funding is the right way, or there can be some changes or some suggestions which can come from your side? So over to you, and thank you very much, sir.
Yeah, thank you very much. And I'm delighted to be a part of this distinguished panel. And a very warm welcome to all the participants. Yes, it is true that State Bank of India, being the largest bank, is having a substantial exposure in the healthcare sector. And recently, our outlook in the sector had turned positive. It was earlier neutral. So we are right now inclined to take more exposure. Moreover, recently, I think in the line with the RBI directive and the government steps, SBI has come up with a very liberalized scheme in which the investment grade companies will get the funding at an extremely competitive rate, ranging from 4.75% to 6%. And the other parameters are also, since the collateral things is again waived for the investment grade companies. So having said that, these schemes comes temporarily. But overall, what the lender looks when financing a hospital or say any other project is that for a hospital, the most important thing is the brand. If the hospital is already having a good brand and which is indicated by their accreditations that they have received, the criticality of the medical procedures they can undertake. The second important factor that we look for is location, whether the hospital is located in an area where the affluent sector of the population stays nearby, affluent and educationally qualified, who are more aware about their health. And this is a very unfortunate part, that we have to focus on those areas where the affluent sector lives, because somehow we have observed that the affordable healthcare sector is not a very viable scheme for funding as yet. The reason for that, I think, is required to be pondered. Because when we are funding an affordable hospital, the numbers does not match up. So this is an unfortunate part that I think the government need to do something policy-wise. Need to provide some incentive. We need to provide maybe the loan at a subsidized rate. Maybe the priority sector tag may help. So these are some of the suggestions. Again, if a company or a hospital doesn't have the brand, they're coming up for the first time or setting up a hospital, then what we look for is that whether they are having the required deep pockets to sustain till the hospital becomes viable. Because normally a hospital becomes viable in around 3 years' time. And for a new entrant, the time may be even longer. One of the key issue raised by Mr. Pasarthi was that we generally fund for a lower tenor. That means say around 8 years. And hospital, as per my experience, requires a funding of 12 to 15 years. So part of the blame, of course, as a lender, I will take. But again, the part of the blame is also with the consultant who convince the clients that you take this loan because I think their fees are at stake and the things can happen later. They give a rosy picture about the future. And partly also the promoters themselves should be aware that they should not accept something which cannot be achieved in the long run. For State Bank of India, the funding long term is not a problem. I can understand the limitation of an NBFC where they are going for smaller loans for smaller tenor. So that is an acceptable business model for them. But when we are funding hundreds and thousands of crores for big hospitals, it is always better to give another extra 1 year or 2 years for repayment. Because if the cash flow is better than anticipated, there is always an option of prepaying the loan without any penalty. So that takes care of the fear that the interest cost will be high. So these are the main aspects we look at. And recently, SBI has come with a, just briefly, I have told about the interest rate and the collateral thing. The Arogyam scheme of SBI, and here the debt equity is 3:1, and there is no collateral requirement. However, if the hospital is not investment grade, that means their rating is worse than BBB minus, then the collateral requirement is there, and that is to the extent of 25%. And I was just with extreme interest looking at hearing what Mr. Anuj had to say regarding the flexibility of NBFC. And I think we can complement each other, because being a big bank, that flexibility is difficult for SBI to achieve. So we have to accept it. But however, we are doing that equipment finance. But where our strength lies is that here the quantum of loan is not an issue. Where they are catering to the requirement of, I think, up to 3 crores. So for us, even 3,000 crores is not an issue. And maybe they are extending the loan of up to maybe 3 years to 5 years. We can go up to 15 years, and if required, even longer. So this is in a nutshell what a lender's perspective is. And hospital is, while we understand that hospital should do well in the long run, because the penetration of hospital is very low, and the number of doctors are low. So, and the demand is high, affluent sector of the population is growing. The hospital tourism, I was waiting for somebody to speak on that, because this is a huge opportunity. And I think I have read somewhere that the hospitality sector, not hospitality sector, I'm sorry, the medical sector can become the next IT in terms of the quality of healthcare we can provide at extremely affordable rates when compared to not only developed countries, even in compared to other developing countries like Indonesia and China. I think China is no longer a developing country, so they are in a category of their own. So I think there is a lot to be done. We have progressed somewhat. Some policy push is required from the government side. The investment in healthcare sector is still a lot less than desired. And when we are talking about the huge population, treating 1.4 billion of population, we have to find out to make affordable hospitals viable. Thank you.
Thank you, sir. Thank you very much. I think you have candidly accept that the banks are not in a position to do very, very long-term funding, but still you are considering the funding which can be required for a longer period.
Subject to realization.
No. I think there is some misunderstanding.
Yeah.
I have told that we can go long-term. We can go 15 years for hospital. This is not a problem. We can even go 18 years if required.
Okay. That's a big thing. I think if it 18 years, it's a very, very long term, I think, from hospital point of view. So I was talking to somebody in Singapore or US. They said that whenever they are approaching to any bank for funding for hospital, they are saying that we will not give you for less than 25 years. So this is the situation that the other countries are looking in a different manner actually. Whenever we are going to our Indian banks, then banks are saying you are asking 12 years, let us try to work out at 10 years actually. So this mindset has to be changed actually. It's still changing. Now it is changing that you told 18 years is a very long period also. So and as you told that affordable, I think affordable healthcare funding, which is a very important thing, which need to be taken care. And it's a very good suggestion which you have given, and we will take it to the policy makers that there should be something, some incentive or some kind of I think policy should be there, like affordable affordable housing. The government has come out with many schemes, many I think incentives have already been given. So for affordable healthcare infrastructure, something can be done. That will be great. And other than that, you have covered very well that you are funding a lot to the sector. Arogyam scheme is one of the best scheme, but which I have seen, because I have compared with the other banks scheme also. Your rate of interest is the lowest, and the terms are very liberal. That you told that collateral requirement is not there if it is less than triple B. If it is more than triple B, the investment grade rated company, which is I think something very I think innovative in this current situation. So but this is I think for the non-metro infrastructure. So through this, the new entrepreneurs can come. They can set up the hospital. They can set up the other healthcare infrastructure, and this reach can be there in the tier 2 and tier 3 cities. So they should also get the same kind of healthcare facility which the metro people are getting. So and there will be less load in the metro hospitals also. So that is good, and I hope so that this will be a great success where a lot of entrepreneurs will come and they will take the advantage of it. So thank you very much, and friends. So I think we have covered a lot in terms of the challenges and opportunities in the healthcare sector, then the various funding options, debt, equity, and the other supply chain financing, and the short-term funding, long-term funding. So all areas we have discussed, and I think it's a great learning to everybody. We have some questions from the audience also. The people are asking about the business model for hospital. So if Partha Sastry sir can take this question, where somebody has asked that there is any business model or there is any ready model where we can know the risk in the hospital. So because you must have done many business model or financial model for hospitals, so we would like to, I think, if you can give some comment or some highlight on that. If somebody want to set up a new hospital, how they can know that what is the risk involved in that?
The question is a little anomalous. Risk is a very broad term. So if the issue is about the risk per se for an entrepreneur, obviously any business is risky. Now, hospitals in general are the human side of a business. It is not a business. It is a human side. It's a human to human interaction, care. So a person who comes to you unhappy has to leave happy with you. So basically, risk on a business perspective, yes, there is risk. There has to be, and if you say that, well, you can map it out in a risk framework, yes, we can do it. There are also models by which we can have a risk analysis, but it depends on so many aspects thereafter. Firstly, we need to understand that being a human to human interactive service, a single case can actually get your hospital down the dungeons. A single incident can be very dangerous for a hospital. A single wrong diagnosis can lead to doctors being, shunted out. So basically, it's like hospitals is a very dynamic risk management process. And risk management can only be achieved in a hospital through setting up of panels, setting up of doctors, a structure in which you know that every process is defined in a manner which is conducive to the general well-being of a patient. So that is most important in defining the risk. So a risk management model for a hospital, if yes, somebody can develop it, I would be really, really happy to get it.
Great, sir. Thank you very much. Thank you. Thank you. I think that now the technology or IT is helping. So there can be some model which can be fit and proper kind of model. You just put the
Yes,
number and you can
I
get
think
it.
they're trying something with an AI development.
Yes. Great, sir. So I think it's a great discussion, and you have already crossed our time limit. So I would like to close the session here. And I would like to summarize that I think we had a good discussion where we could discuss all parts of funding. Our panelists have contributed a lot. They have, I think, spoken with I think, without any hesitation. So they have expressed their views, whatever they can from their point of view as expert. So, and our audience will definitely will get the advantage of it, and the people who have listened us, they will use in their, I think, in their entrepreneurship journey or in their job profile wherever they are involved, and this will help a lot to the entire sector, where this can reach to the entire sector also. We will there are some suggestions which we will try to take care with the policy makers. We will write or we'll do it to them, that one is that affordable healthcare. I think there should be something for the affordable healthcare infrastructure, which is very, very important, which need to be taken care. And so friends, I would like to thank you once again to all the panelists, all the participants, for making it successful. And thank you to the Resurgent India team for organizing this webinar, where we could come together and discuss on the various funding aspects of healthcare. And I wish all of you a very happy and healthy life, and safe life also. Thank you very much. Thank you, everybody. So nice. Thank you, sir. Thank you very much.
Thanks, everyone. Thank you.
Thank you.
Thanks, Ashish ji. Thank you.
Thank you, sir. Thank you very much, sir. Thanks a lot.